Alrighty, folks. So we had a couple companies report earnings after the bell. We're going to break them down in this video, starting off with PayPal, whose stock went down 1.6% on the day. It closed at 78.42, and now it's over $80 after the bell. So let's just dive into it and take a look at what is going on. They did $1.24 in EPS. I believe that's unadjusted, which beat the $1.20, so that's good. And sales ended up missing, barely, but they did miss. $7.38 billion versus $7.39 billion estimated, and they see Q1 adjusted EPS of $1.08 to $1.10 versus $1.07. So, that's a little bit above the estimate there, and net revenue growth of around 7.5%. Not too bad. They also see full year 23 adjusted EPS around 487 versus the 475 estimate. That is not too bad. Let's see what else is going on right here. Net revenue is expected to grow 7.5% on a spot basis and 9% FXN there. Let's take a look here. What else? Anything else about guidance? Not seeing anything else, but it looks like the stock, again, ended up popping over. Wow, it actually got all the way to $85. Look at that, guys. It got all the way to 85. But notice how we got rejected there. Now we're actually collapsing back under $80. And we have that conference call pretty much. It might have already started, but obviously it's soon. And we'll get more clarity and see what direction PayPal ends up picking from there. But if we pop the 4-hour chart up, you're going to notice, take a look at that, guys. PayPal is in this downwards channel. And with today's aftermarket action, well, it is still in this downwards channel. And it doesn't look like it wants to break out. It tried breaking out couple days ago, tried breaking out of 87, 88. Clearly, we got rejected there, got all the way down to 79. Now we got to 85 after the bell. It's roughly at 80 right now, and we'll see. Is this time, this go around, is it going to break out? I'm not convinced yet, but we'll see how the conference call goes, and I'm going to set alerts in the meantime. I'm going to put one at $88, and I'll put another one at, let me put that at $90. Let me see here. Markets that were above $90 a share. So another company here, guys, that I'm looking at is Cloudflare. Let's pull this up. Ticker symbol NET, or rather NET. This one is up a good amount, $6 after the bell. You guys can see it closed at 58. Now it's at 64, and it got all the way to $69 a share. That is a massive move. We're talking 17% pretty much. Once these numbers came out, that's how much it went up. So let's take a look here. They ended up doing 6 cents EPS, which beat the 4-cent estimate. That's great. And they ended up beating on sales, 274.7 million versus 274.02 million. So double beat there, and they see Q1 revenue of 290 to 291 million. Not bad. And let's see, anything else on guidance? Not really seeing anything else on guidance, but their total loss in dollar value was $45.9 million. It looks like maybe adjusted EPS came in at 6 cents. Looks like unadjusted was a loss of 14 cents. Either way, the stock is moving up a pretty big amount here. Again, it's up 17%, or it was. Now it's up more like, let's see, about 12%, which is still big. And it's the big thing here is the fact that on that 17% pop, it took the highs out from the beginning of February, roughly $66, $65. That is a very good sign. And if we take a look here, that was also resistance from back in the beginning of September, right around 65, 66, also from the end of August. So if we do clear above ultimately $70 here on Cloudflare, we have a wide open gap pretty much to 80 at that point. So I'm going to set my alert at, I'll put two here. I'll put one at 65, and I'll put another one at $70, and we'll see what happens at 70. That's the really big one. If we could take that out, actually, it's really 68 to 70 roughly. Either way, from there we could end up running to $80 for all we know, right? Let's see what Lyft ended up doing. Lyft reported after the bell. Oh my goodness! And you guys saw Uber the other day. That was yesterday. They reported their stock went up. Now Lyft reported, and did you guys see that drop? Holy smokes! That is insane. It's at $12.18 right now, and they close at $16.20. This thing is down 25% after the bell. That is just unbelievable. So let's see what ended up happening here. They did, let's see here, actually, no, that's revenue. 1.18 billion revenue versus 1.16, so they beat on that. Looks like they lost 74 cents per share on an adjusted basis. That's not good at all. Revenue per active rider was $57.72. All right. That's for Q4. It looks like here their revenue was up 21% year over year. It's probably the guidance. Yeah, it's probably the guidance. It says here they see Q1 revenue of roughly $975 million, which is under the $1.09 billion that is estimated. So that's a decent chunk under the estimate there, even though, and again, their revenue's up 20% year over year. Doesn't matter. Stocks are forward-looking vehicles, and a lot of the time, if guidance is not strong for revenue, especially for a growth company, the markets, the stock is not going to like that. So yeah, downbeat revenue growth. It says it right here. That's a big reason. So yeah, Lyft is collapsing, guys. I don't know what else to say about that. Right now, it's a falling knife. We're under the moving averages. And look, this is what we just saw is a clear bear market rally. We failed. And look at this. We failed. The fact that we failed at this lower high here compared to the, last major high, which was back in August, where we hit that lower high, that's not good for the bulls at all, obviously. And if I pull up the 3-year chart, you're going to see, man, we've been making lower highs. Let's just put it that way. So Lyft is not looking good at all, guys. Let's pull up Expedia. Expedia is ticker symbol EXPE. I always mix up this one. EXPE. This one's falling as well. Look at that. So they closed at 117. Now they're at roughly 114, and they got all the way down to 105, which is a drop initially of 9-10% after the bell here for Expedia. So they ended up doing $1.26 EPS, which missed the $1.65. Oh my goodness, guys, that's bad. And revenue ended up coming in at, what was it, $177 million? Is that the revenue? No, it's not. That's the net. Okay, yeah, that's net. That's net income. Revenue $2.62 billion for the quarter. I'm not seeing anything on guidance. Let's see here. Q4 stayed room nights at 74.6 million versus the estimate of 75.1. So maybe that is a little bit. It is a little bit under the estimate. That could be a reason. But wow, look at that. Now it's starting to spike back up towards 115. So clearly it's very volatile after the bell, guys. And overall on the 4-hour chart, we can see this one's not quite yet collapsing as bad as Lyft. Lyft is under both moving averages, whereas, what was it? Expedia is slightly above the 180. So maybe we could get a move on this thing. Maybe a short-term relief rally, a bounce right around 100, 101, or rather $100 to $105. Maybe 110, kind of where it is right now. And of course, I'm not going to just FOMO and jump into it now. I'm going to let the dust settle a little bit after these earnings, and we'll see how it ends up going. So that's Expedia. We also had Dexcom report. Let's pull up Dexcom, which this one's not making much of a move, but the chart looks pretty solid. We're uptrending. We're in a wedge at the same time, but now we're starting to peak out of the wedge and the moving averages. So this one's poised for a breakout, in my opinion. And after the bell right now, it is up, it seems, a couple bucks. So that's pretty good. Let's pull up the live news tab and see what is going on. They ended up doing 34 cents EPS, which beat the 27 cents. So that's good. That's the estimate. And sales came in at 815.2 million, which beat the 809.65 million. So double beat for Dexcom, and they guide for it's full year rather, 2023 revenue of 3.35 to 3.49 billion versus the 3.46 billion. So that's pretty good. Pretty upbeat guidance there for revenue for the full year. And anything else worth mentioning? $1,000 invested in the stock. You always like seeing those article titles, right? Where it's like $1,000 invested in this stock 15 years ago would be worth $49,000 today. That's clearly an article here on the live news tab. Either way, pretty good. And we can see the uptrend is again continuing. We're about to break out by the looks of it, of this wedge as well. So this could be a breakout candidate any minute now. And I'm watching it for that exact reason. We also had Duke Energy report this morning. The stock went down 1.6%. We have a head and shoulders that we called out, and it looks like, I drew this out a couple of days ago. It looks like it's playing out. We're clearly dumping now. The right shoulder is well on its way to completing. So if I pull the live news up, let's see here. We can see they ended up doing, and again, they reported this morning, they did $1.11 EPS adjusted versus the $1.07 on sales of $7.35 billion versus the $5 billion. Oh my God, they destroyed that sales estimate. But I guess maybe that was priced in. I don't really track Duke much, guys, to be honest, or any utility stock for that matter. They see full year 23 EPS outlook 555 to 575 versus 566 estimate. All right, not too shabby there. But overall, guys, I'm looking at this from a trading perspective, and for me, the chart does not look good. So for that reason, I'm staying away from it until it starts to reverse, maybe above $100. We get some higher low action, which we're just not getting that. Doesn't seem like we're getting that anytime soon either. And another one I want to go over, guys, is Philip Morris. They reported this morning, and their chart does not look that bad. Let me show you this. We actually have a bit of an ascending triangle. Let me actually clear the set and redraw this. We have a bit of an ascending triangle playing out here. You guys see that? Boom. Look at that. You know, we've been making higher lows for a couple months, but at the same time, we've had resistance at 104, 105. So I think ultimately this could be breaking out any minute now above 105. I'll set my alert there and see how it ends up going. And of course, guys, please do your own research, your own due diligence on these stocks. We're just breaking down charts here for fun, of course. And 105, that's the key mark there. From there, we could go 110, maybe even higher. Baby steps, guys, baby steps. We'll see how it ends up going. So they ended up doing $1.39 EPS versus the $1.24 estimated on revenue of $8.15 billion versus $7.58 billion estimated. So pretty nice double beat for Philip Morris. And do they have any guidance here? Let's see here. Total Marlboro cigarette shipments were 60.67 billion. Looks like here the revenue was up 0.6%, so not crazy revenue growth, but they crushed the estimates, which is solid. And the reality is, guys, the sad reality is, let's just be honest for a second here, right? Let's be real. During recessions, and we're not in a nasty recession, I would say, but let's say it gets worse. It could get worse. You never know. During recessions, what happens? People are more stressed out, and guess what? It sucks, but it's the sad reality. People use more of the product that Philip Morris has, provides. Marlboro, you guys know what those are, right? They smoke more cigarettes. Let's be honest. That's just the reality of the matter. So, yeah, this stock, I mean, I don't own it. I've never owned it, but the reality is it probably could do well, throughout. It's a defensive stock. I mean, you guys know that. It's a defensive stock, and I'm looking at it more as a trade. Again, if it breaks that 105 mark, which if it does, we could have a big move, maybe 110, maybe even higher, but we're not there yet. So I set my alert, and I'm going to be very patient on Philip Morris. So let's see the next one, or what? That was 7 stocks, and we're zipping through the video, guys. We're 12 minutes in. Let's take a look at how the markets are doing right now. Markets are selling off. Looks like SPY did fall under that critical 408 level. We actually closed at 407, and now actually we got all the way down to 405.80. Look at that, 405.80, guys. That was a bloody sell-off to end off the day. So it's clear as day to me now. We're under 408. There we go. And we're probably going down to 400, which is the next level that I was talking about, which is the the next alert here on SPY. So keep that in mind, guys. This is starting to break down for the bulls. We have triple Q under 302. We broke that support from the past couple of days from all of February. To me, this looks like it wants to go 290. Call me crazy, but that is what I'm personally seeing here on these charts. And despite the fact that the markets went down, we still had a green day. And Tesla, of course, Tesla just keeps on defying the laws of gravity, guys. We had a huge day in Alibaba, big day in Activision Blizzard, which you guys know that one's going to be it's going to be one that's very volatile heading into whether the merger, if the merger goes through or not. It's going to be very volatile before we get that decision. We had Tencent. Similar name there. Tencent, we talked about earlier. This went up 4% on the day. And let's see some downwards movers. Coinbase got slaughtered today, guys. It was just horrible. This thing is down now from 87 to 59 bucks in just about 6 days. 30% drop in 6 days. That's nasty. It's nasty. And I'm not trying to be a doomsdayer, but that could happen to Tesla as well. That is the type of pullback I believe could happen to Tesla here any day, any stretch. If we get one rough week in the stock market in general, again, remember, we've had a great year so far. Year to date, the markets are crushing it. If we get 1 or 2 bad weeks, Tesla could easily retrace 20%, 25%. You guys got to realize that. And sure, at that point, it might get bought up and the rally could continue, but A lot of people are getting FOMO on Tesla. They're getting too excited. Just pump the brakes a little bit. Be patient. At least that's what I'm doing, right? At least that is what I'm doing. So let's see. Anything else, guys? Or maybe I can just wrap the video up. I don't know. Maybe I'll just wrap the video up there. It was a rough day. I mean, Snapchat had a rough day, 5% loss. Google, 4.5%. If this goes under 90, I'll be buying more Google, guys. And yeah, maybe we'll make another video today. Probably not. This might be the last one for the day. So if you found value, hit that like button. Feel free to subscribe. Don't forget to get your stocks from Moomoo, up to 15 stocks from Moomoo, each up to $2,000 using that link down below, and up to 12 stocks from Webull with any amount deposited. Also linked down below. And full disclosure, guys, all of those are affiliate links. And feel free to join the Patreon as well. We started a portfolio on Patreon. We're growing that from 0 to however big it gets, and it's on Patreon down below. There's also a Discord chat. I post charts throughout the day, and you get one-on-one access with me, and it's only $10 a month for the first tier, which I think it's a pretty good deal for the month. So check it out. Link down below. I'll see you guys there. Peace out.